President Trump announced a 100% additional tariff on China, which will apply to all Chinese imports.
President Trump says the U.S. is imposing an additional 100% tariff on imports from China starting November 1st.
Within just 12 hours of Trump's decision, more than $1.6 trillion evaporated from the American stock market.
The fears of a global disruption in trade sent Wall Street stocks tumbling, wiping out $1.65 trillion in market value.
In response to the tariff, China once again imposed a ban on rare earth minerals and asked all countries to stop American exports.
China has tightened its export rules over rare earth minerals in a move that could significantly impact global supply chains for electric vehicles, industry sources have told CNBC TV 18.
According to experts, this decision by China could cause massive damage to America's defense economy. Angered by China's move, Trump announced a ban on several critical software programs. These software tools are very important for China, and this decision could directly impact China's tech and manufacturing industries. Many experts say that the real trade war has now begun. Goldman Sachs has warned that if this trade war escalates, the U.S. economy could fall into a severe recession by 2026. And if the trade war continues, the biggest impact will be on the US and China. But for India and Southeast Asia, this could be a major opportunity. In today's video, we will analyze these 5 points in depth based on real data. And in the end, there will be a question for you, one that you'll be able to answer after watching this video. Let's begin. On October 10th, Trump's sudden announcement of a 100% tariff and the threat of a software export ban spread fear in the market. This announcement led to panic selling in stock trading due to concerns over a new round of trade wars and the growth of American companies. Within just a few hours, $1.5 trillion was wiped out. Around $19 billion also vanished from the crypto market. Bitcoin fell by nearly 10%. This is the biggest single-day drop in history. Especially in technology and global companies, there was a massive decline, causing heavy losses for investors in all major corporations. For example, the Nasdaq Tech Index saw the biggest fall because their product supply chains are most dependent on China. Trump's tariff policies will now further weaken investor confidence, accelerate capital outflow, and could lead to multiple rounds of wealth destruction. For this reason, many international investors are now moving away from high-risk assets and shifting to safe havens like bonds and gold, as they believe instability in the US dollar and treasury yields is starting to rise. Major investors and experts like Mark Cuban, Ray Dalio, and Scott Minerd have warned that if the trade war continues like this, we will keep witnessing repeated hard crashes, which will directly impact not just big investors, but also the wealth of common citizens. In response to these tariffs, China imposed export bans and restrictions on rare earth minerals and advanced technologies. It clearly stated that if any country sends its rare earth minerals to the US, China will stop trading with that country. These are the same rare earth minerals that you are seeing on the screen right now. China has restricted the export of exactly these minerals. China is the world's leading exporter of rare earth minerals. In 2024, China exported a total of 17,700 tons of rare earth metals worldwide. These are used for defense, high-tech, EVs, semiconductors, and battery manufacturing. Due to these Chinese restrictions, the U.S. tech and defense industries could face heavy losses. The U.S. mainly imports minerals like neodymium, praseodymium, dysprosium, and terbium from China. Neodymium and praseodymium are used in the production of powerful magnets, electronics, and motors. Dysprosium is used in military equipment, high-temperature magnets, and missile technology. And terbium is used in manufacturing green phosphors, laser systems, and display technologies. The U.S. primarily uses these minerals in technology, electronics, F-35 jets, Tomahawk missiles, radars, UAVs, and wind turbine batteries. Although the U.S. has reserves of these minerals, it has no facilities for processing or refining them, which is why it currently depends on China. In response to China's rare mineral restrictions, the US has announced bans on several critical software systems, a move that could directly impact China's tech and manufacturing industries. The list includes all of the following software. These software bans could cause 5 major setbacks for China. First, chip design and manufacturing will slow down. China currently depends on American EDA, electronic design automation software like Synopsys, Cadence, and Siemens. Without them, making high-tech chips, especially for AI, 5G, and military defense sectors, will become extremely difficult. Second, the AI and cloud industry will be affected. For AI training and research, libraries like TensorFlow, PyTorch, and JAX, along with major cloud solutions, are essential. Their shortage could slow down the growth of China's startups and tech sector. Third, the defense sector could be at risk. With U.S. software support halted, China's progress in military technologies, including missiles, lasers, satellites, and AI weapon systems, will slow down significantly. Fourth, there will be supply chain and production disruptions. Many Chinese manufacturing sectors, auto, smartphone, electronics, rely critically on these software tools for design and verification. Creating alternatives quickly is not possible. Fifth, there will be an impact on global trade. American companies like Synopsys and Cadence could also face around 10 to 12% revenue loss due to losing the Chinese market, which could further slow down technological innovation. America is the world's biggest consumer. Its 340 million population actively consumes goods worth $3.5 trillion every year. That's why, for the entire world, the U.S. remains the best country for trade. And China is the world's largest exporter, exporting raw materials and other products worth $3.6 trillion to the world. One country consumes, and the other produces. If a trade war begins between them, it will negatively affect every sector across the world. According to experts, if this trade war escalates, the world could witness the biggest economic tragedy in history by 2026. Global supply chains will collapse. This clash could lead to a major dip in industrial production and exports across the US, China, Japan, Canada, Europe, and other nations. The manufacturing sector could face a severe recession. Due to broken supply chains and rising prices, everyday goods, mobiles, electronics, and automobiles will become more expensive for at least the next 18 months. Clean energy sectors like EVs and wind turbines, the tech industry, and the defense sector could face a deep crisis. Job losses and reduced hiring are expected in manufacturing, retail, supply chain, and logistics sectors. Due to new regulations, companies are now in a wait-and-watch mode. Inflation and ongoing shocks will hit ordinary people the hardest, especially the lower-income groups. Repeated policy uncertainty, new taxes, tariffs, and export bans could severely impact people's financial planning, savings, and family expenses. In this era of the trade war, India and Southeast Asia face both opportunity and challenge. Due to the US-China tariff war, a major part of the global supply chain could shift from China to countries like India, Vietnam, Thailand, Indonesia, and Malaysia. But diplomatically, this could become a complex situation. On one side, Vietnam, Thailand, Indonesia, and Malaysia seek security and investment from the US, while on the other, they continue to expand trade with China. This could create diplomatic imbalance. In such a situation, India holds a major opportunity. First, because of US tariffs, Chinese products are becoming expensive. This is gradually boosting the influence of Make in India in the US and European markets. Recently, rapid growth has been observed in IT, pharmaceuticals, electronics, automobiles, chemicals, and textiles. Second, India's relations with China have recently strengthened. India has produced its first semiconductor chip and is shifting to platforms like Zoho, which serve as alternatives to Google, Microsoft, and WhatsApp. China may support India's tech sector to counter the US, but if China, in return, dumps cheap products into India, it could put pressure on Indian manufacturing. Third, recently, India made large-scale reforms in its production-linked incentive (PLI) scheme, labor laws, and local manufacturing policies, which helped India's exports reach $183.74 billion between April and August 2025. Most of this growth came from electronics, engineering goods, and pharmaceuticals. With the world's cheapest labor force, India has the potential to become the largest exporter and a global manufacturing hub. However, to achieve that, India must further upgrade its infrastructure, logistics, ports, tax system, and skilled workforce. Fourth, many global companies like Apple, Samsung, Google, Dell, and GE are now considering setting up factories in India. Due to India's neutral foreign policy, these companies feel their investments are secure and labor is affordable. India is also avoiding getting entangled in the political war of tariffs. Even with tariffs, companies still benefit from cheap labor. But to sustain this, India must eliminate corruption, which remains a major challenge. For India and Southeast Asia, the trade war is a double-edged sword. With the right policies and reforms, they can emerge as new supply chain leaders. Otherwise, the risks and instability will continue. The US-China trade war has brought both opportunities and threats for India and Southeast Asia. Only those with strong strategies will win. Currently, both countries have economic nuclear bomb-like weapons to maintain monopoly, which can inflict economic damage on each other. China has rare earth minerals that could harm the U.S.'s defense and technology sectors, while the U.S. has software that China depends on. This is enough to impact China in the tech sector. This trade war is like cutting off one's own foot for both countries. The whole world knows how crucial defense is for the U.S. and technology is for China. Therefore, it is possible that this trade war may not escalate. In the future, if China develops an alternative to U.S. software and the U.S. becomes self-reliant in processing rare earth minerals, a trade war could start, but it is unlikely to happen anytime soon. For the U.S., finding mining and processing resources like China is difficult, and for China, creating cutting-edge research-based software is challenging. Both countries know each other's weaknesses well, so an escalation of the trade war is impossible. So, are the tariffs being imposed this time to manipulate the market like last time? What is your opinion? Please share in the comments. For more videos like this, subscribe to our channel.